Good afternoon, everyone. I'm joined by Ivan, and we won't go into our intros. I believe a lot of you would know us already, but we have spent a lot of time in the options market, and it is something that we're very passionate about, and obviously build technology and services around supporting. This today's session is on a topic that if you were to be a fly on the wall in the conversations that Ivan and I have about our own personal trading, and also about the projects we've done around quant testing information to help people get better information about trading, it always comes back to trading systems, which is what we're here to talk about today. Now, I'm just going to click straight to disclaimer. Any advice contained in today's presentation is general only. It doesn't take into consideration your personal circumstances. You need to decide for yourself whether it's appropriate for you, and past returns are not an accurate indicator of future returns. And the other thing is options are risky. If you're going to do it, you want to make sure that you do it well, and to do it well, you must have a trading system. All right. So trading without a trading system is like starting a business without a business plan. All right,
which you had a really good 3-minute analogy about bakeries. And,
that's right.
Do it again.
So if you're, it doesn't matter. You can choose any business that you want to approach, and I'll go back over the bakery example. But if you opened a bakery because you're passionate about making bread, baking bread, and you thought about how to make the most delicious bread that everyone would love and travel far and wide to consume, that might help you have a successful business. But if you don't consider where your bakery is located, if you don't consider how you're going to hire staff that are friendly when you turn up and smile at you and aren't rude to you, and how you get them to turn up every day, and how you manage your inventory so you can produce the bread, and how you build in processes so you can get, when you're not there, other people to do it on your behalf. All of these things that would come up with actually make the foundations of a business plan, or the things that you would consider in running that business, must be considered. And a lot of the time when people approach trading, it will be similar to like, I'm passionate about bread. It's I'm passionate about picking direction, or I like to look at the market and consume the data, or I believe that I can predict what world trends are going to emerge, or how the an event that might happen, like a geopolitical event, might impact what the market does. So I enjoy thinking about those things, but then when I go in to do a trade, I don't actually have a business plan. Therefore, I don't have a trading system. Right?
And I think the big thing, that the reason why I'm so passionate about this, and for those of you that have probably listened to sort of the videos that I've done through the game and things like that, you get in your mailbox. The reason why I'm so passionate about it, because I've learned firsthand. So I started building trading systems before I even started trading, and then testing them out with very small portions. And in the market, I went straight to futures, which is how I started out. But and you build something, you test hypotheses, you test them in the market. Typically, as you're starting out, if it's the first time, you've got to trade small, and you'll probably continuously lose money at the start.
Yep.
And it's like anything else, you just get better and better at doing it, and you refine the systems and processes. But the one thing that I ended up making a lot of money, and then ultimately losing a lot of money, and I made a lot of money by following and having a very strict trading system that I was following, and then ultimately lost money when I went completely against it. And it's so important to be able to control your emotions, to not let noise get in the way, and stick to the thing that made you, or the edge that you've got in the market that you've found. And so I think that where a lot of people go wrong is, even if they have a trading system, then adhering to that trading system is where people really, really go wrong. So if you've got a very specific, okay, I'm going to make 20% out of a trade, and I'm willing to risk 40 because my chance of winning, for example, is higher, or maybe it's the other way around, when you've considered all of those points, and then you go on and say, okay, market's at 10, my stop's at 12, market goes to 12, and then you go, okay, sorry, 10, 8, the stop's at 8, and you go, okay, and then it gets to 7, 6, 5, company goes bankrupt, and you're still sitting in the trade, and then you just get to that hope element.
Absolutely, and
you can't have that in trading.
And also it comes down to putting the work into when you set up a business, it's knowing that you invest the time, energy and effort to have the ingredients that need to be there to be successful there, right? So you're not just going into it thinking, okay, I need to go and put a trade on in the market. I know that I've got to actually think about how I'm going to act if it goes against me, or where I'm going to take my profit, or when I change my view. These things need to be considered, and work needs to be done in setting up a system so that you know that, you know what, if I go and do this and I continue to do it, that I might not make money in the next trade. I might not make money in the next month. I'm okay with that because I've got an approach to trading that overall I'm very confident I will make money out of. And where we have a, if you read about trading and I guess the way that we structure some of our systems are, there are people that trade. If you ask someone what's your percentage rate where you pick direction and you get it and you do it correctly, and someone says, I get it right 80% of the time, right? It's such a vague bit of information that's almost useless, and it doesn't move you towards making money at all, right? But it's one of those metrics that it sounds good, and for someone new to trading, come in and go, this guy's really good at picking direction, he gets it 80% right. Whereas we know that in history, a lot of the most successful traders have made money out of getting it right 10% of the time, right? It's just that when they get it right, the one time out of 10 they get it right, they get it so right. They ride something massive. And the times they lose money, they know that, okay, the lineup, the setup for this didn't work. So I only get it right 10% of the time, but I'm a hugely successful trader. Versus I get it right 90% of the time, but the one time I lose money, I lose a hell of a lot, or everything I put on that particular trade, I just take more profits and my costs torch me.
The other thing is that it's interesting, people that do early stage investing, for example, are exactly the same. You do a lot of this kind of stuff, and you do a lot of raising in that area. By the way, for anyone who's interested in getting access to it, it's worthwhile chatting to Patrick about it. But, the typical approach there is, I'm going to put in, 10 trades, 10 investments, and hope that one of them makes strips everything else. 10 very ambitious. You obviously, come up, do your due diligence, and then invest in the deals that are going to really shoot the lights out. And VCs are the same. They look for, stronger returns. It's interesting. For a lot of really successful traders, they have that, the way that they wire themselves is that I don't have an issue being wrong all the time, but I know that I've got the edge.
Absolutely. So in the setup of a trading system, why? Well, we want to be in a position where we make our decisions before we do the trade, right? We make our decisions before we actually put money into the market. So we're not looking at and interpreting information saying, I think if that lines up and that line goes above there, then I'll trade it. We've already got a trading system where those rules have been defined, tested, and then we can trade mechanically. So when I go and move into a position, I have a structured process that lands me in the position. I'm not getting emotional about being great or being smarter than anyone else. I'm just observing the data as it happens. And then I can reduce the emotion that comes in and out of the trade. Knowing that I don't get it right every time with my trading system means that when I'm doing a trade, this could be one I make money on, or it could be one I lose money on. What's important is I execute my trading system. So if it goes up, great. I make, if I'm bullish and it goes up, I'm making a profit. I've got rules around how long I stay in the trade for, or how I approach that. If it goes against me, I'm just observing the data. I'm in this system, it gets to here, that means I'm out. I don't care I lost money on this trade because I have a view that if I do this over enough instances of trades, I'm making really good money and I'm getting what I want out of it. It's when people jump around and try and game their own systems that they get into trouble, and being risk management focused all the time. So, I'm not focused on how much money I'm making on the trade. I'm focused on an overall plan that I have that makes money out of a certain style of trading and that I keep rolling out over time.
And, good traders that I've come across, that I've ever worked with and on the trading desks, they're always eternally pessimistic because they're always talking about the worst case scenario, and it's the bad trades that they'll talk about. Which is funny, which is very different to, say, brokers who will catch up and talk about their big successes or their big corporates. Traders just go on and say, oh, Jesus, I had this trade, I lost a lot of money.
Yeah, it's true. It's absolutely true.
So different.
they almost don't want to jinx themselves. You know.
And it's really funny. You'll get two traders in a pub talking about stuff or a fancy cigar bar or whatever, and you literally think that they've both just had dreadful months, and you go like, "Mate, you okay?" And they'll be like, "Yeah, I'm fine. I just bought a new car or something." And it's like, "You're talking this way." It's like, "You sure?" I'm like, "Yeah, no. It's just I had a bad trade. I had many really good ones, but that was the one trade that I'm focusing on. I don't remember what happened. It's the one that lost money." Yeah.
All right. Well, I guess in this day and age, technology should be a part of your trading systems. I mean, we're not here to say there's one way of doing things, but things have changed, and having technology that's available to you is critical. And being able to harness that to be able to get information about what actually works and what doesn't work is super useful, and everyone should be using it. Ivan, I guess this is...
It's obviously a slide that a lot of you guys have they've seen our webinars or so have seen, but well, I guess the analogy that we make is what people forget about is the real change in computational power that exists today. And so the finance industry really hasn't, for the most part, hasn't really evolved. If you think about, in 1985, there was this 2.5 ton computer. It was the first supercomputer called Cray 2. It was a thing that sent stuff into space, like really far into space, and navigated our solar system. Today, even the iPhone XS, which is now being dwarfed by the new iPhone and the new Samsung phone, even more so, that's 6 times more powerful versus a Cray 2 supercomputer, and effectively it's 240 million times more powerful than the performance of the Apollo 11 guidance system. And it's bizarre that just over a period of 1956 to 2015 we've had a trillion-fold increase in performance, and that means that you can calculate literally 1 trillion times what you could calculate on a supercomputer in 1956. And that goes to show that where we're going is a whole new world of investing and trading. And I think that for us as a technology-focused provider, it's not just saying, okay, well, we've got a couple of hypotheses that we believe from our trading days, because at the end of the day, I can give you a trading system outline, and even with your experience, you can trade it and lose money while I make money on my trading system. And that's happened all the time. So what we've tried to do is actually use real empirical evidence, get real quants behind this, test our stuff, give it to someone who doesn't know anything about trading, just knows about crunching numbers, and then turn that into something that anybody can use. Now, ultimately, it's a base for everybody to go on and utilize and get the statistical edge, and then develop their own overlay on it. So, we've got things like, our trading plan, for example, and you can go on and write over it and grow on that. Which if you want a free copy of that, by the way, let us know as well. I don't know, write something in the chat box. I don't know what you do with these things. But anyway, so it's you run your webcasts. Anyway, so that's sort of something that I think is an important base.
Yeah, absolutely. So ideally, if you can look at lots and lots of different data points, and you can actually prove whether something works in your favor or not. And one of the things that, you can read books about this, but humans are particularly poor at assessing the odds of things, right? And there's a good book I read not so long ago called The Undoing Project, which is what's the guy that wrote The Big Short and
Lewis.
Michael Lewis. And it was about a couple of psychiatrists or psychologists that had built a lot of they'd done a lot of research into human behavior and how how humans will look at things. So if you get a bit of information which, for example, says there's 50 red pieces or coins in a bag and 50 white coins in a bag, or it could be any iteration of that, and you were asked to create odds on how many, whether you thought it was 50-50, whether you thought it was 80-20, whether you thought it was all whites, whatever. The way people do odds is, well, the first 3 coins I pulled out of the bag are white, so now I'm going to say it's an 80-20 mix, right, or something like that. And these are people that studied statistics that were coming up with these numbers. So qualified in statistical analysis, but
Not psychology.
on the most basic sort of put into that environment, they would come back and say they weren't sure. So what you really want to help you through this process is, so if someone says, oh, if this is a high, low, whatever it might be, and this happens and then that happens, that means it's going to go up. Well, prove it, before you use it would be the...
It's funny. It's actually an interesting point. I've been hearing a lot about this in sort of podcasts and things. It's this our brain has these neurological shortcuts for everything. It's like, so the way that I listened to something yesterday, which was interesting actually, and it's like it's all literally serious. It's like if you think about a phone with apps, our brain literally works like a phone with apps. So behind it is all these intricate wiring and whatever else, and in reality, we just it's like a shortcut. Right? I'm bored. I'm going to go on Facebook or Instagram or something. It's like it's amazing how our brain literally just the smallest amount, and that's where it ultimately comes from. You go, okay, I'm going to get into trading because I want to make a lot of money. Great. And then you just make shortcuts all the way through, and a series of bad mistakes, and end up being worse than where you started. Unless put in the hours, in our case.
Yep.
What are we, 9 months project with a series of 5 quants.
Yep.
And we I don't know if you saw the email.
Yeah, I did. Yeah.
Yep. So we're going to get 2 PhDs and 1 postdoctorate for 3 years.
Yep.
At some point in time, middle of this year, they've all.
So what I mean is, let's go back to that point in one moment. So in building a trading system, we'll establish a hypothesis. We'll then test the hypothesis, and we'll define the rules, and then we'll optimize the rules. So we've built trading systems around breakout trades. We've built trading systems about market consolidation. We are trading with untested trading systems at the moment around volatility and the like, which is something that I've traded for a long period of time. So we're trading and setting up a hypothesis through our observations and trades that will then go and get tested. So what I was just saying is that we're working with a university who will be providing us, one of the top universities in Australia will be providing us with 2 PhD students and a postdoctorate student. And then for these hypotheses, well...
They're actually their grads, so they've got their PhDs, and one of them is a postdoctorate, which is crazy.
Which is amazing. And then the way that builds into our training systems is we can then sit down with those guys and go, well, here's the hypothesis. And that could come from you. One of our clients recently came up with a great hypothesis that we're helping him go through and test and trying to give him more data and so forth so he can back test it efficiently. It's simply a trading system around reporting seasons and volatility increases and stock movement through those periods and how you can set up a trade to trade that. Right, so that's the example. Going forward, whilst we have done big projects, we are going to be continuing these projects. We've got more stuff that we want to look at with our own trades, but then we want to introduce this as something that we can do, for example, to help Brian, who is working on the long straddle type strategy around reporting season, where we can assist in the testing of the hypotheses, the defining, and then that optimization factor as well. But this is not something that you need to have a PhD working for you to be able to do, because if you're trading in a certain way, you should be able to go and do this for yourself. All right. So ultimately, you want to be in a position where you can make money, doesn't matter what the market does. You've got something that's tested. Now, we give you access to the ability to go and back test things as well. So you can do all of this yourself using our system. But you want to end up with something that you can actually use. All right.
Yeah, you don't want to have something that's overcomplicated. There's obviously, things like the Goldman Sachs thing, we've probably actually got it somewhere. But, that was like a massive trading system that was super short term.
Yeah.
You just, you want to have something that is clear rules, in, out, step by step.
Yep.
And it's going to make sense. So, for example, if your trading system is based on the weather, raining, and then going, if it's raining, I want to go and sell the market and make money on the downside. I mean, sure, there might be some correlation there because we're generally more pessimistic when it rains, but that doesn't mean that there's any real correlation.
Yeah.
Just because you found it, it's going to make sense. It's going to make logical.
Absolutely, and it could be really simple. So it could be a situation where, someone might say if it hits a key, breaks a major resistance level, then I'll go long. And, you know, and to be simple, we'll show you a very simple one in a moment. But the system part of it might not be so much the picking direction part. It might be you've got a way of picking direction. You might say, I've got a great gut feel for the market, or I've got, you know, all certain stocks. So I've got ways of going long. But then the system part of it might be just what you do after you do that, right? So how do I protect my capital? Or, you know, I believe I can get it right 70 or 80% of the time, but then how do I set up my trades? What sort of profits do I take? That kind of stuff could be an example of where you bring a system in. So this is one that we've shown. No doubt a lot of you will have seen this before, but it's an example of a trading system, right? And the rules around this and the system part of it, if you request, we can send you a copy of the trading system notes around this. If you would like that, just write system in and we'll get that sent across. If you want to, if you don't already, and I know a lot of you will have had trials of this, but if you'd like to get a trial of the platform and our systems and our trade ideas that are quant created and any of that kind of stuff, just type yes into the chat box and we'll get you set up with all of that. All right. So in this instance here, simple system which is designed to trade breakouts, right? So the questions that we ask ourselves in the setup of the trade is the share price above a 52-week high, 50-day moving average above the 200-day moving average, is the share price above the 50-day moving average, is the 50-day moving average trending up, is the ADX above 20, right? So there's a set of questions that we would ask ourselves in setting up the trade, and if it's ticked to all of those things, then we would then enter into a trade. So on one part of the strategy is actually picking the direction. The next part of the strategy is how do I set up a strategy, use an options trade, right? So if I click out of here and we just go into our platform, then what's the market doing? Absolutely nothing. Let's go back to our strategy builder.
I think same is down 1%.
Is it really? Okay. Vol is not doing anything so far. All right. So in the breakout trades, we use a strategy called a lit long. So if I put in just lit and click on yes and
yep, 30, 60 days.
Yeah. Then what I'm looking at here is first of all, I've just chose Woolworths. It doesn't really matter what I'm choosing. That's, I think, getting close to being a lit long. I'll just put a couple of extra contracts in here. All right. So let's say you were happy to do a trade where your maximum loss was 1,000 and your maximum profit was 1,900, right? So if we'd gone through the process, first step would have been checking that step 1, step 2, step 3, step 4 to arrive at this is legitimately a breakout trade. And then our next stage would be to choose the strategy. Now in our trading system, there are things that we consider around volatility, what the time to expiry of the option that we auto build into the system. So by choosing, just simply choosing the strategy lit long, it'll automatically put that together for you. And we also scan the market looking for those exact points so that we can have a look at what's going on. And then that sets the trade up for us. So in this case, we're doing a trade where, you know, market goes, you know, if it goes up quickly, we benefit. But time, if you look at the expiry date of 26th of March, then you can see time works in our favor as well. It gets better with time, right? And as long as it's heading in our direction. So we get that benefit of time decay working in our favor as well. So if you're looking at the way that we would scan through to that would be simply go trading scans, and we just automatically scan the market every day, asking ourselves the questions, is the 50-day moving average above the 200-day moving average? Is the share price above the 50-day moving average? What's the 52-week range? Is it above that? Is our ADX above 20, and so forth? So you can see that a lit long approaching, there's quite a few trades approaching lit long at the moment, and which is, you know, not too surprising given that we're close to our all-time highs.
More.
Yeah. Surprising. Yeah, that's interesting. There's a bit of, well, I can't back this up with any empirical data, but there seems to be a bit of dispersion. Like there are things going well, and then there is a lot of stuff that's not doing so good or doing poorly.
So it's typically, the thing you expect, and this is what you've been seeing through the bull run continuously. This is a really good screen. I think we spoke about this in the past, but it's a really good screen because the top 75 stocks roughly, plus the XJO, have options over it. This is a screener on all of those stocks. Typically what you expect is the majority of the index is actually the top 80, really, companies in Australia. So what you typically get is you get what you would be expecting if the market's breaking 52-week highs. Then you should have like a whole list of stocks that are breaking the 52-week highs because your big stocks are leading, your blue chips are leading away.
Yeah. Woolworths is here.
Yeah.
It's not a lit long at the moment, but it's banging on the door of being a lit long.
Yeah.
So
20 cents away.
Yeah, and then if that was to happen, you simply click on that button and it'll launch it. So if you want to get access to those trade ideas or the platform, just type in yes, and we'll coordinate that for you if you haven't already done so. If you're playing the options trading game at the moment, all of that is available to you.
Yeah.
Now, one of the tools that we really wanted to show today was the back testing, right? So when we are talking about you being able to go out there and test your trading for your trading hypotheses for yourself, well, this tool was built exactly to do that. So you can go back. If you click on the back testing, it is available for game players and anyone that takes a trial and any of that. But it takes you to a section which allows you to go back in time and allows you to price up any option strategy that you so wish to price up. And the reason we can do that is that we've been keeping the volatility data since 2015, and so that allows us to get accurate pricing within that market
for any option that was ever there
for any
every hour.
Yeah. So then I can go back and say, back in 2016, when the market was doing this, if I wanted to do an iron condor on CSL or CBA, or I wanted to go long XJO or whatever it might be, I can actually price that up and I can trade it and see would I have made money, wouldn't I have made money. So if you've got some trading rules that you've been given or you use, you can go back and have, or you could say, well, I'm not sure, I want to test what you guys say you can do. You can go back and test our trading hypotheses and go and price it in lots of different, over a long period of time to see whether it works or not. So this is a really key part of being able to test your hypotheses. And on the right-hand side, you can set your chart up in any which way you like, and you can bring whatever indicators you want to bring onto your chart so you can do your analysis. And then we'll maybe just go through an example. Ivan, would you like to select a stock?
CSL.
CSL.
One that we get asked about a lot.
Yeah. And starting date.
Doesn't matter.
Take your pick.
It's been on a rampage.
Go back to, say, September or something like that.
Sure.
All right. And we go create. All right. So let me go back down here. Well, I won't set this chart up with too much information on it, but basically you can see that it's going up, and we can tell you that it's making 52-week highs all the way through here. So it's broken down here, it's come back up, and then around here it's making another 52-week high. So let's just say, without even going and exploring and doing any more research than that was a breakout trade for us, right? So let's go and say, let's apply our lit long. So you're sitting in here, you're in the back testing, you've got a picture of the chart, you've chosen the date you're looking at, you then go into click on cookbook so you can select any strategy you want to put together, all right? And I'll say on this particular date, I'm going to go lit long, all right? I can take it to 52 days, that's fine. All right, and so I've now set up this trade, all right? Now, I can override, oh gosh, you idiot, negative. Let's just override this.
I'll teach you one day to use the calculator. I don't think I've ever actually written a number in there.
Yeah, So anyway, on this particular trade, every time I do something to Ivan's calculator, he cringes. But the max loss on this particular trade is 3,200, and your max profit is 4,770. And so when we go into this and we want to back test,
I'm just going to add a 50-day moving average to this because that's kind of important. Cool. Just so we've got that for reference.
Yeah.
Because effectively, it's part of our rules that if the stock goes below the 50-day moving average, you shut it down. And, you shut down one of the legs. Again, you want access to the rules. It's probably irrelevant to this conversation.
Yeah. Right. So, but based on that, it's probably, we know ADX would have been all right. It would have been okay to do. All right. So, so as far as back testing now, if I want to go through and have a look at how I would have traded this, right? And I don't actually know what CSL did on the 2nd of September, or I know overall it's gone up. So, and we go, okay, where are we at? So, and the next day we got into the trade. The next day we were at a loss. So we went down and finished the day at $76 down.
As a brokerage.
And and then it came off, and I'm down $800. And it's come back up a bit, and now I'm up $200 now. So I can go across and see, oh, that's not good. That's really not good. It got right down to that 50-day moving average, which is where we get towards our repair strategy.
And then that's your repair.
Yeah.
No, actually, it would have probably not closed down below.
Yeah. So it didn't close below. So you then still ticking along. Anyway, the point of this is not whether or not we made money on the trade, because we didn't do the proper setup work to determine that. But it allows me to go and back test, right? So now we're short, then we're long, so we'd be flitting around a bit with this particular trade. But it allows you to go through, and it allows you really to ask seriously volatility, but it allows you to ask the questions on how would you have traded? What would you have done there? Because you actually do have to take action based on our trading system, based on that indicator. So and then what happens after that? How do I then change what I do, and all those sorts of things? But it allows you to go back and test and really think about, why do I do what I do, and not on one trade, right? Because on one trade you can go, that was a good trade, that was a bad trade, and and again, pat yourself on the back or whatever, or give yourself a best case scenario. But really, it allows you to go and then set up your hypotheses over time. So if someone had gone and done this trade and had repaired it in the appropriate way and then moved back in because of the indicator, so our indicator here would be telling us out and then back in again, probably around here, and you'd be jumping around. This would be an interesting ride, but anyone who rode it and traded it sticking to the rules would have made really good money. All right. But this is what this is set up to do. It's to give you the ability to go and test what you're doing. So all of you, if you want trading systems, we can provide you with trading systems. We've got...
just before it's interesting, that is an interesting example of how, imagine if you're actually in that trade, how emotional you would have been, and so the worst case scenario for most people is, in this scenario, if the trading system said that you've got to be out here and then back in again when it opened up above the 50-day moving average, which is what our system would have done, we would have been absolutely torched on those 2 days. Now, if you didn't follow on into the trading, you decided to bend the rules because of the emotional attachment to, money, a lot of people would have not done the adjustment, broken the trading system, and the one time that it would have saved them here would have, then their brain would have actually been wired to say, actually, you know what, the system is broken or whatever, and they would have ended up then missing it the next time or the time after, and then ultimately taking some serious losses. The whole point of the trading system is saying mechanically, this happened, it broke the 50-day moving average. I am going to be effectively short here because what we know statistically is that when that happens, most of the time it does this. In this case, it went back up, so you'd close that, you'd lose $5 on the trade. You know, like this would have seriously dented your profitability. It still would have been up, but there's not, and you would have ended up, or worse yet, you would have taken this, and then you go, okay, I follow this trade, and then the next day it's giving me the signal back, and you miss that, and then you end up taking a full loss. It's so important that whatever your trading system is, when it's back tested, you follow the rules, and then from there can you actually go on and you know. Yeah, it's just purely mechanical. It's got to be mechanical.
You've got to be mechanical, and you've also got to just be able to accept the fact that you will have losses. Yeah, you will have worst case scenarios play out. It's part of being in this business, right? If you don't, you know, and if you're not willing to accept that, confront it, stare it in the eyes, and do not trade options. Do not probably trade anything. That is what this game is about. There's no hiding from it. Trading is about making yourself, trading successfully is about making yourself do what is unnatural to you, right? It's going against the natural pull. You know, if you do anything else on this planet, like if I turn up to work in the morning, you know, without my pants on, people are going to look at me weirdly. I might get arrested, right?
I've seen you in your bicycle.
yeah, actually, that's a good point. But the point there is that when you're a trader, you get to do whatever you want to do. You're 100%. There is 100% freedom to do what you want to do. But the paradox is that you actually need to operate within a really structured manner to be able to manage that freedom. So, you know, when we talk about why we trade, it's, well, I can go and I can do this from wherever I want to do. And that's why some people want to trade. For me personally, it's just something I find fascinating. I don't necessarily want it to, I make it part of what I do for a living, but I don't want to be a full-time trader. That's never been something for me. But I love the fact that I get to make my own decisions and the adrenaline of making good decisions and then actually getting a financial reward from it. I find it incredibly interesting and a rewarding process to go through. But you have to have the process behind you. And you really want to make sure you spend the time setting it up so that you're confident about what you're going to do and knowing that you know, it's not just the next trade. It's what you do with your trading. That's kind of the hard bit for people.
I you know, it's just, you know, just as you were saying that, it actually just probably caught me that it's funny how much my business life has been impacted by my trading life in the sense that because I've forced myself, you know, when I started trading when I was 14, and then particular full-time when I was 18, 19, it was crazy how much that forcing yourself to do unnatural things has given me so much, you know, like quick decision making and ability. It's funny how interlinked trading is with entrepreneurship, and it doesn't come naturally by any stretch of the imagination. But
well, it's always it's
so I think
if you're like, what profession is a profession where someone's had life experiences that will help them be a good trader? Farming is one of the ones that is absolutely the case. Farmers make good traders because they've always had to make their own decisions, and they always get rewarded based on they get over exuberant. You know, they don't plan ahead. They, you know, they overwork the field or whatever it might be. That they pay a price for that. So they have to make rational decisions and have a system and a plan and look at data and all that kind of stuff. They can't just sort of stick a finger up and feel the wind. So yeah. Anyway, we digress as we do. So has anyone got any questions? This is a bit of a funny topic because it's like, you know, it's not as nuts and bolts as maybe some people would like, but I think it's a really important conversation. The next session that we're running is on trading strategies. So we're going to be talking about iron condors. We're going to talk about for how do we trade when we expect volatility to fall or when we expect a stock to consolidate or at least trade within a certain range, and we want to make money from that. We're going to talk about, again, the strategy of breakouts. We'll go through that step by step, and we'll talk about how we trade increases in volatility or an expected pivot point or significant event which will create a big stock move, or if not a stock move, an increase in volatility, right? And how we set those trades up. So there are, I guess, probably the three main systems or the main ways we go about placing our trade. So we'll be sharing those in the next session. Now, if you want,
while you're doing that, I'm just going to look up the strategy that I was thinking about doing. Did you get your straddle on? No?
Yeah, I did.
Yeah. I'm just going to hijack this completely.
Yeah.
Would you go March?
Yes.
Yeah. Okay.
Yeah.
So this is a strategy which will make money if the market goes up or down. Sort of interested. Volatility's down. It's ticked up a little bit back to sort of just sub 11. Matrix. All right. Interesting. So effectively, what do we got? 10 to 13 is probably where we're at. So it'll be about a 20-25% move. Not bad. Not bad.
That's pricing up pretty nicely. I paid 179 yesterday.
179.
Yeah. Bowls have gone up slightly. I must be paying a couple of cents for time decay.
179. Okay. Interesting. I think with where the market's at, it's probably
that is a good trade. That is good pricing. So the issue that I had on trying is that if I waited, I missed, and my pricing's pretty good as is.
Yeah. Did you get the 70/50s?
I think so.
Yeah, interesting.
I'm pretty sure I did. I'm just checking.
Yeah, I think that might be an interesting trade. How long are you thinking of being in it?
8 days.
8 days.
Yeah.
Right. Yeah, you don't get too much time decay either, which is interesting. Yeah, cool.
Yeah.
You might need to approve my trade.
Yeah. So on this particular strategy, did you adjust vol?
I did. Yeah, I was checking it down.
Yeah. Yeah. So yeah, I think it would be natural for just staying in the normal range. If you're in at 10.5 to be able to get 12.5, that would be a natural thing to occur over the next 8 days. It would be unlikely that wouldn't just normally happen. But it could go down further first or whatever. If it consolidates at this level, that would be there could be another opportunity. But again, as Ivan's pointed out, volatility move or just a move up to these next levels, there's a good opportunity to make a little profit. One of the interesting things about the long straddle, we do digress, is that it's one that I like to just sort of cherry pick on, and then every now and then you wake up and something major's happened and there's a big breakthrough and volatility really goes for a run. I know that's sort of, you like time in the market, but I don't mind the idea that I can do a strategy, go to bed, wake up, something massive's happened, and that's the best case scenario for me. Other than that, I'm happy for it to do normal stuff, which I have got a pretty good feel and handle on. Yeah, but we'll talk about that next. We've got a trade group on Thursday.
Yep.
So there's a bit going on, obviously coinciding with the ASX options game at the moment. So for any game players, those Thursday sessions we'll be looking and scanning the market. It's an interesting. It could be a really interesting session because we're up at a pivot. Yeah, we're right up at a key level. So we can see that last time we had a good break. We went for a really good run. Subsequently, we've come off and it's gone back up. Will it break and go for another run? We've seen what it's done in the past. That's it's been a fair bit of time doing those types of moves. Or will it be another consolidation through here and a sell-off? But we are at a pivot, and we do expect over the next week that there will be either a breakout and a bit of a move up, or some more consolidation on the downside. And where to from there we don't know. But it's an interesting little period of time at the moment for traders. It's been there have been plenty of opportunities there. But if you've just been trading as, I need to go bullish, then there are times when you trade. The challenge is for people in the current markets, we see this a lot, is that we actually love the market when it breaks up. Right? So, or down. But, it's been overall bullish. We don't mind trading when it's above 52-week highs. And it's counterintuitive to the way a lot of people look at the market, because they'll look at the market and go, oh, what goes up must come down. kind of mentality, or if it's gone for a good run, that means it'll come off and consolidate. And we don't disagree with that. However, when it does break out, that's when your opportunity to go long is there, and that's where you can make money and make it very, very quickly. So you sometimes have to be patient to trade in that way, but those trades have been around, and then I think it'll be interesting to see the next 2 days what happens, whether there's that pullback or whether it breaks through and we go up. It'll be interesting to see. But yeah, all right. Perfect. I think that's it for us for today. So yeah, thank you to everyone making the time. If you would like to get, and you don't have access to the platform, or you want to trial, or you want to open up a trading account, start actually trading for real with with what we do, just type in yes, and we'll get you set up for all of that. Otherwise, see you on the next session, and have a wonderful day. Cheers.